Okay. Maybe, just maybe we're there. I gotta find the chat. Yeah, all kinds of problems today. All right, yeah, all right, Emil's here. All right, sorry for that. Just life's challenging, I guess, or at least YouTube is. So we could try to read into this. The easiest thing is risk off. Okay, so that makes this trade difficult, although this one is still technically working quite well. The standard operating procedure on this one is risk on. So what we're setting up is this. Now, we just analyzed the general market conditions, and it is unfavorable currently, or at least by currently I mean the very recent past, meaning like earlier today. What this is saying is, well, by the end of the week, we should be down. Oops. Okay? That's the difference between trading smart or trading scared. Okay? So all we're saying is this is the right price to execute your risk on trade. We know it's not, or currently hasn't recently been risk on, but that doesn't change your outlook. So now what you're doing is on a time frame smaller than a 4 hour, you are preparing for a short. Okay? And of course, there's two prices that you're concerned about. The high, oops, didn't want to do that. The high of the current 4 hour candle. And then, of course, the highest high. So what you are looking for, what your trade plan would be on this would be that. Okay? Okay? So I want this to fall still. And the reason for it is simple. Well, first of all, I'm a carry trader on this. But second of all, it's part of my general plan. Okay? Part of my general plan. So I understand the risks associated. If it goes higher than this area, which is really like, why are we splitting hairs here, right? You should have plan A and plan B like that, which you did last week anyways. That's the whole point of this is what you planned out last week. Okay? So we got some troubles down in here and all that kind of stuff, but it looks like we should be able to hit our target. And of course, if the market conditions are no longer favorable, then what we'll have is a small loss. Okay, but that's fine. That's fine. Don't worry about that. It's just a small loss. You're going to have lots of small losses. The thing is, you're going to have many more bigger wins, and that's all that matters. So right now, what do we know? We know that we had a previous high, and our current highest high, which isn't even this week, it's last week, is lower than the previous one. And we also have a series of lower lows. So if you're still a bear, and this is your bear sell zone, now all you're doing is on a smaller time frame, maybe a 15-minute instead of a 4 hour, you're looking for this. And it might even be next week's trade. We don't know. It's only Tuesday. Okay. Okay. So that's that. You either have a plan, you're staying with your plan, or you don't have a plan and you're like a chicken with its head cut off, running around making a bloody mess. Nothing going on here. Okay. So a little bit of, this is a little bit of peso. It's not strong across the board, Now we might have some rollovers and stuff, but right now we know Euro's strong, so we don't want that. So we're looking for maybe this sucker to roll over. And if this rolls down, and these market conditions are terrible for that. Like this says mediocrity at best. But if this happened to turn down, that would sort of grease the skids for our peso. But I think what it tells us is the peso's pretty mediocre. Okay. Why is EU so strong? Maybe somebody's buying it. Okay? Or maybe last week I prepared you for the giant rally. So it's kind of silly to ask the question that way, like why? Dude, what you just told me is you didn't follow through on the plan. I gave probably 9 reasons why on Thursday and Friday of last week. I think some of this we did in the live trading group. Okay, my Thursday group. I think I spent a lot of time explaining why I thought, well, the reason why could simply because it should. It's supposed to. Okay? One way of looking at it, the way I explained it, I mean, over the course of hours, right? We know this is where bears exit, so they're gone. And then we know this is where bulls buy, so they're in. Maybe it's just supposed to go up. Okay? So our target in the live trading group is to take this up to at least 19, but on our way closer to 20. Okay? And did you guys see the open on Sunday? It was gorgeous. It came all the way back down and gave you the 17 psych level. It was gorgeous. Okay? It crawled onto the silver platter for you. Okay? Just beautiful. Just beautiful. Okay? And then you can see the day trades. Up, 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 down, down, buy, up, 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 up. What's the next trade plan? Down, down, buy. See, if you're just messing around with Euro now, you don't get it. You do not get it. You do not get it. You don't get the point of trading. Okay? When we were down here last week, it was all down for 5 days in a row, and we discussed that. And then the whole point was, well, what's it going to do next? And a big part of the conversation was there's nothing on this chart technically to tell you why. If all you did was look backwards, you're going to be late quite a bit. And that a big part of trading is being able to predict the future. Meaning you take in this information and you say, well, if it's going to go up, then it would go up here. And you would put the technical analysis now, and your prediction would be to push this north. Now, of course, I did an hour version of the conversation, but that's the whole idea. Otherwise, what you're going to do is you're going to sell this rally because of what was happening. Well, that's not quite enough, is it? Okay, so anyways. So there's the general target. We hope we can get it. Technical analysis is suggesting it should do that. And then, of course, if everything goes right, then we get one of these next week. So again, what I'm saying is if you're logging into your trading account and you're only participating in that candle, you're not even really a market player. You're not even in the market. You're just part of the noise. Okay? You should be in here, you should be in here, you should be in here. But doing something now is so silly. It's so late. what you should be doing is this. And then, of course, what we're hoping for in the longer run is this. So those are your plans right now, right? This is sort of Wednesday's buy. There'll probably be a Thursday in here, and then a Friday down, and then maybe a Friday front run or a Sunday open. And, you know, you should be well almost into next week already as far as your trade plans. Monday, Tuesday, okay, Wednesday, Thursday, Friday, okay? That's where you should be mentally. Oh yeah, so the question is, if you join FX Bootcamp to take all the hours and 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 hours of courses, video courses, at some point you're going to need help putting all of the complexity together into a cohesive, sort of actionable process, right? Like, how do you take the I mean, you need to know how to use moving averages. I mean, right? You need to know how to use pivot points. You need to know how to use price action. You need to know how to use fundamentals and all these other techniques that go into everything. Like, there's a lot of complexity what we do. And of course, you learn piece by piece by piece by piece by piece. Well, the next step in your education is, in real time with other people, how do you get experience putting all these pieces together into a logical plan that you can believe in, right? So that's what my Thursday live trading group is. It's some of it is me. Like last Thursday, I just did a big lecture. Sometimes, however, we do group work, and you're working with other traders, and now it might be another trader with you that's just learning, so you just watched maybe a dozen hours worth of videos and you have some questions like, how do I do this and how do I do that? But other people in your group might have been been working with me for, Jim's been working with me for 15 years. Like, there are very, very, very experienced people that are in my live trading group, and then there are brand new people, and that's sort of how to put it all together. That's why I have that group. So it's a place where you can kind of bounce ideas off, gain experience, get some questions answered, that kind of stuff. Okay? Yeah, sometimes we go through meeting minutes, sometimes I go through Fed reports, sometimes I go through other central banking reports, so it's a mixture of technical analysis, fundamental analysis. The last 2 or 3 weeks I did a lot on trader psychology, and having the fortitude to stick with your plan. Okay? Right? Things like, this is up, even though it's been down for the entire week, right? I believe Meta was on this on the way down, and then we talked about how that was an amazing trade, absolutely perfectly executed. And now the next part is likely to be this, although there's nothing on the chart to suggest that. It comes down to bias and probabilities, and how do we measure probabilities? Well, that's what technical analysis is. What's the probability someone else will buy this? What's the probability that anyone that's selling it will exit that sell position? Because remember, when they exit the sell, that's one less person battling your long trade. There's one less person in the way. Okay? Okay? Our other live trading group meets daily, and they're working on creating professional traders that can consistently trade a bias so that they can work in a fund. But that's super advanced. That's down the road for most. Okay? So cool, right? So imagine having the psychological advantage of persistence and fortitude versus stubbornness and tomfoolery, for lack of a better word, right? There's a difference between being stubborn and buying drops and consistent and buying dips. Okay? So you can see here, I offered last week, we offered the double bottom, which you got, or the higher high, higher low, which you got on Sunday. Like, it was just beautiful. Absolutely perfect. But having the psychological strength to be ready, willing, and able as a bull, even though it was down perfectly, beautifully, perfectly bearish for an entire week, it still didn't change the current. Okay. Cool. So that's how that works. Yes. So yeah, how do you get into the Thursday group? Yeah, you sign up for FX Bootcamp, and then it'll invite you. It'll say, hey, when you're ready, it might be now, it might be later, you can join the live group. Okay. So Sammy, you join FX Bootcamp first, because the live group isn't necessarily about how to do this and how to do that and what does this turn mean, and we cover a lot more complex ideas, but the training courses, the video courses, cover how to do this, how to do that, and then the live group will show you how to put all those pieces together with a little bit of finesse. Yeah. Cool. All right. Oh, and by the way, I am building my book club. I did a lot of research, and I cannot find previously made software to do what I want it to do. It sounds subtle, you know, you're like, Wayne, you could just pay something. But anyway, so what I'm doing is I'm going to build it from scratch. So I've already hired a team, and we're going to go through, and I looked at probably 30 different websites that each have kind of a piece that is cool or not cool. Some of them are just not cool. And so I'm about 80% into my vision for what I want it to do and how I want it to behave. And then I'm going to pass that SOW over to the development team. I'm going to build it from scratch. So let me know if you're the type of person that could read like a trading book in a week or so. So what are they, typically 200 pages, right? I mean, at Harvard, we'd bust that out in 3 days, 2 days maybe. But if you're the type of person that can read an entire book and take notes, detailed notes, which means you have to be able to, you know, ideally it's with pen and paper. I'd like to see pen and paper versus typed out. But if you're the type of person who can thoroughly read a book and take thorough notes, you know, almost page by page, but certainly chapter by chapter, let me know. I'd like to build a small team so that maybe we're always flushing out, you know, 4 or 5 books at a time. And then, but inside of that, I also want to build this very interesting, awesome community where we're all reading the same books together at the same time. And I would like to bring in the author and interview them and ask them questions and all that kind of stuff. Yeah, Jim, yeah, like a cheat sheet. But I have an idea. So if I had, let's say, 5 people read the same book and they all wrote summaries, then we can get together as a team of 5 that have all, or 6 that have read the book, and then, you know, sort of strategize on a way that we can help all traders completely absorb the information depending on their modality of learning. You know? So I want it to be way more than reading a book. Because I know book clubs. My wife, in fact, has been the president of several book clubs. And here's what happens. Nobody reads the damn book. You get together, you have some Chardonnay, and by the time you're in your first 30 minutes, you're talking about husbands and babies. So I'd like to take it much further advanced, that we read the book, first of all, as a community all at the same time. which means we need to be able to order the book at least a month in advance. So we need to be always ahead. And then I'd like to get to know the author personally. I think that'd be great. I'd like to see what other people thought of the book. So this is sort of like a college course where you don't read the book together when you go to class. You go to class and everyone's already read the same 3 chapters that week. And you've already written a paper about those 3 chapters. And now you go in and you have an intellectual conversation about it. And the professor is more of a guide. Well, what do you think about this? And what do you think about that? And how did this impact you? And what did you think of that other thing? And the students can argue and debate with the professor, but argue and debate with each other. And that's what college is, right? At least that's what Harvard was like. So I would like to I'd like to lead those conversations too. Like really, let's have a thorough discussion, an intellectually challenging but open conversation about it, and in a way that is, much more educational than even the author was thinking when they wrote the book. Okay, so think of like a mini Harvard. Okay, what if there was a university class? So how about this? Maybe this makes it a better idea. Typically at a university, a professor picks a textbook. And the textbook is the guide for the class. Okay? And over the course of 16 weeks, the professor creates lectures and provides homework and examinations as you go through all the chapters in the order that the professor sees fit. The professor gives a lecture, but you're also reading the text at the right time. And when you get to class, you discuss what you've learned already, and then it's all put together in a proper flow. Like that's how it typically is, right? There's a book, there's a professor, there's a class, there's homework, there's there might even be section lectures. So what if we organized a book club in a similar fashion where it's much more than us just all reading the same book, which I think is cool. But what if it was a very, very impressive intellectual collaborative learning experience focused more on mastery of the ideas of that particular author? That's what I'd like. So we can start, if I had a team that I could rely on that can read the book and take detailed notes, then we can really create a positive learning experience for everyone when we get to that book, because it'll already be done. We'd already have the stage set. It's sort of like, like reading Shakespeare and then going to watch the play live. It's so much better of an experience if you've already read the Shakespearean play. Like you've already read The Merchant of Venice, you've already studied the roles of Antonio and Portia and the other characters, and you know the inside jokes and and all that kind of stuff. And then you go see the play, to laugh at the joke because you've already studied it and discussed it, right? Like you're at a different level. Or learning the history of Egypt before visiting the pyramids, So anyways, that's my thought process. So I will have someone build it. So let me know if you want to be a part of it. And I think I'll keep it generalized, not just Forex. I want it to be sort of for investors and traders. So I'd like it to cover Forex and macroeconomics and trader psychology and, real estate, stock investing, bond investing, gold and oil. Like we got to read The Prize and The Quest. Okay. But, like if I ask you to read The Prize by Daniel Yergins, I think it's 1,000 pages. I had to read that one and his other one in less than 2 months. So in that one class, I had to read 2,000 pages in 3.5 weeks. So, wow. But you got, if you want to be considered an expert at trading oil, if you haven't read that, you're not an expert, because every expert in the industry has read the book. You just have to know it. You just, like, literally. So anyways. All right, cool. So yeah, so anyways, we're on our way to the conservative target for the day. You'll have to plan out tomorrow and the rest of the week. Okay. Let's take a look at, like, let's do Aussie. And that's where we are, and it is heading down. Okay, fine. That doesn't change anything. It comes down to now, if you were going to buy it, if you were a bull, I'm not saying you should be a bull. It's already bearish, so you're well onto that, and this is a terrible place to sell it. So let's take the point of view of if you were a bull. I'm going to do it this way. Okay, no, they're a million miles apart there, so let's take a look at that. Let's also change, no, well, I guess I'll leave it bullish. Where's the monthly buy? Okay, so yeah, so this is a walk away as far as bulls are concerned. And you see how that's done, guys? This is why we use technical analysis. As far as Aussie dollar is concerned, we're done for the month. Now this can change, but psychologically you're done. Now there's some hope here. If this does turn north and 70 holds, you might be able to buy next month's pivot. The only thing we have right now is next month's entry around 70. So it's a bit of a Hail Mary, because you're not going to find a lot of success buying a trade like this. Okay. But you can't ignore the fact that this is a psychological level, a major psychological level, and likely to be a setup for next month. So let it reverse first on a small time frame and then take a shot. But it has to be at or near 70. A good way to lose money is to keep buying drops. What's the difference between a drop and a dip? Okay. This is a dip. 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 This is a drop. This is a drop. Now this is a dip. Okay. This is a dip. But this is a drop. And how do you know? Whether it's making lower lows and lower highs, or higher highs and higher lows. Okay? So this is very dangerous and very foolish, but you could do it if it reverses first. Remember, what you want to do is you have to identify support first. If there's no support as a bull, you cannot buy it. I don't care. If you're not buying at support, then most likely you're buying a drop, and that's where poverty lives. Okay? But if you got this killer level of support, so let's say you hypothesize in the future 70 will be support. Okay? That's you now predicting the future, which is, by the way, your job. Okay? So there's 70. Okay? So what you're looking for is it does this on a smaller time frame and you buy a dip, or you walk away. Done. That's it. And it's only the 20th. It's a little early for buying next month's trade. But you're like, hey, euro dollar's got the up, right? Euro dollar's got the bid. Well, right now we just know it's more euro bid than dollar short. But, right? So if people start selling US dollar again, then, I mean, that's what you're looking for. So you got to go back to the index and basically you're going to need to see, yeah, you're going to need to see the move there. All right, so let's go yen maybe. Euro dollar or euro yen's up, of course. So nothing much to report there. Yeah, I mean, it's precisely the same trade as euro dollar. I mean, it's so beautiful. Okay. It's just a crazy, beautiful 1, 2, 3 reversal. Okay, and it's funny. Funny. I don't know if funny is the right word, but these scenarios, whether it's reversing up or reversing down, these counter trades tend to form, you know, Thursday, Friday. And the entry tends to happen Sunday. Right? Friday, Sunday. This is very typical. Okay? And the cool thing, of course, is the entry is here, which is the opposite and equal. Right? Here's your Friday reversal. M3 predicts M1, and here's your Friday reversal. It's just beautiful. Like, it's just beautiful. Pure mathematics is Monday open. For me, it's Sunday afternoon. It's good to have like a Windows tablet, for example. So I have a 10-inch Windows tablet, just simply so I can run MT4 on it, a proper MT4, not a mobile MT4, because that way I can have pivot points and stuff. It's this Sunday midnight. All that means is your London Open is better for you than for me. Okay. I've tried to show people though, like market opens are so important that it could be the only thing that you do. Okay? This is very important because you're going to have a job while you trade Forex. So I wouldn't start where most amateurs start by, scalping. They think, well, if they keep their losses small, it'll be the secret to success. No, because they're also training themselves to have small wins. So it's just a giant time waste. Instead, like learning this, like this is the exact price and the exact time a bear would sell. Okay? And here's the target down here. Target A, target B. Here's the exact price and the exact time, right? And a bull would buy. And those are monthly swings, but inside these you can see like the weekly swings are so important. So the first few hours of trading are the most critical. And like there it is. There it is. There it is. Like you have to understand, by the time you go to bed, for me, by the time I go to bed on Sunday, I'm done trading for the entire week. That's what swing trading does. Imagine you work a few hours on a Sunday and you're done for the rest of the week. Could you possibly have a job if you don't trade Monday and Tuesday and Wednesday and Thursday and Friday? All your trades are the market open Sunday? That's what it should be like if you live in, the New York time zone, or even anywhere in America, really. Because it's even earlier. It's like 2 or 3 in the afternoon, if you live on the west coast of the United States, right? Most people don't start with that much equity. Well, the issue is they have enough equity, they're over leveraged. And it comes down to this situation where they don't, right? So imagine this idea of like, what do you mean you don't have enough equity? Well, you want to make money, okay? There's not enough money in it, is what you're kind of saying. You have to be highly leveraged if you're going to make any serious money. But think about the logic here. They log in, they don't know what they're doing, and they have to make money. Well, that ain't going to work. Right? That ain't going to work. You don't know what you're doing, and you're going to fight me. You're going to battle me. They're like, dude, I'm going to crush you, right? Not you personally, but I mean that type of person. They're like, I don't really know what's going on. I don't really have a trade plan. I don't know technical analysis that well. I don't know anything about fundamentals and macroeconomics and stuff. But I saw this guy on YouTube, and he makes $10,000 in a day, and I want to be rich like him, and so boom, I'm in. You're like, dude, not a chance, right? So that's the issue, I think. Where instead, if you focused on learning and put years of experience in, the little bit of money will grow, right? That's all. We all know that. But what are you going to do? What are you going to do? So my point, though, for those trying to figure out where they at, I would start you at swing trading. And they're essentially a big market open. Because swing trading is a trade that lasts, anywhere between, 1 and 5 days, typically 3 or 4 days. Okay? And position trading would last, 1 and 4 weeks. 2 or 3 weeks, typically. And the cool thing about swing trading is you know exactly the time. You can put it on your calendar. You can put it on your schedule. You can go delete, 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 delete. And you're like, oh, I got to go. Okay? So imagine you had this on your calendar. Okay? And your phone starts beeping. And you find yourself here. Is that a sell or is that a buy? It's a buy. That's it. Done. You're done for the week. Done. You're done. Same thing here. First hour of trading, that's a sell. That's it. Now, there will be buyers challenging this at some point, but as a swing trader, if you're trading without bias, you're going to try it. Now, we know if anyone's gone through the trading course, people are going to fight you here, here, and here. So you didn't really know that this was going to make money, but you knew the price. Okay? Okay? You know the prices. Okay? This is a buy. That's a sell. This is a buy. That's it. Okay. Okie dokie. Stimulus is dead is today's headline. Yeah, but you know what? If that changes, then the market changes. That's why you got to be very careful here. I'd rather you be basing your trades on proper technical analysis like I'm showing you than get caught in these waves of noise. They're sound waves. Okay? Guess I don't know where to go. It's all gobbledygook right now. Let's go to like, where's the one where I have, I guess commodities we can go to. Oh, look at my Bitcoin. By the way, I did catch this. I think it was here and there. But cash, not leveraged. Cool. So anyways, look how beautiful that is, guys. Like, this is what I'm trying to tell you. If you're getting caught up in this he said, she said stuff. Oh, Trump tweeted this and Pelosi tweeted that. And oh, there's going to be a stimulus. Oh, no, there's not going to be a stimulus. Is that the way you want to trade? No. I haven't done it for a couple of weeks, but in the conversations we have with Off the Charts with Wayne McDonald, I talk about having a bigger perspective. Not just today or this week or this month, that there are professional investors that only tweak their positions a couple of times a year. And the upside to that is knowing, or actually not even paying attention to this noise that might be frustrating you or even bankrupting you right now. Okay? You see that? If you only adjusted your portfolio, let's say quarterly, right? You wouldn't be in this nonsense of, oh, there's a stimulus, yay. Oh, no, there's no stimulus, boo. And the market goes up, the market goes down, and at the end of the day, nothing happened except you lost money. Where there's a better style of trading that's a little, it doesn't have to be like so big, you know, that you're only position trading. But look at all the logic that we have on these trades going all the way back to September. Right? There's nothing complicated going on here. There's nothing frightening going on here. So I'm trying to keep you calm and focused, not by ignoring your emotions, but by having good, solid trade plans that are backed by intellect. But understand that we are irrational people. We are emotional people. It's just how we are. That's how we're built. So I'm not saying ignore that, but the way that you balance your emotions is to have a very solid, intellectually planned trade. And you don't need to be part of the noise. Just the noise, the insidious noise. Okay? So this is pretty simple. Is all I'm trying to say, and we have it very well planned, and we're just heading up to the next level. Okay? So I want you to be sort of above that noise. Thank you, Emmanuel. Thank you. FX Noob says, can you be successful trading technicals? Oh, just yes, but yes, you can. Let me first answer it straight off. Yes, you can be successful only trading technicals, sure. However, there will be periods in which the market will technically turn, and because you're following only technicals, you're very much likely to give back some of your profits. So many years ago, over a decade ago, I wrote an article about the difference between a good trader and a great trader. And a good trader is mostly technical, and what'll happen is they'll get 5 or 6 trades in a row that are winners, and then it'll take 1 or 2 trades that to be losers for your technicals to tell you that the uptrend is now down or the downtrend will be up. It's just how technicals are. There's quite a bit of lag, just how it is. You won't, right? You'll sell, or let's say you'll sell the lower high, and then it becomes a higher high, and you're out. It's just how it happens. That's where reversals are. Now fundamentals, okay? Fundamentals are a little bit blind. It gives you direction only, but not necessarily price. A price to get in. Oh, do I have a link to the article? No, it was probably 12 years ago I wrote it. I remember my kids, the day I wrote the article, I actually remember it. I'm sitting in my backyard, it was hot, and we had a bucket. If you're a parent, you'll probably know exactly what this is like. But we had a bucket full of water, and my son just liked sitting in the bucket. He could sit in the bucket of water. You're like, that's how small my son was, but he just likes sitting in the bucket. So there was a hot day, and kept an eye on him. He was sitting in the bucket and having the greatest time of his life. Sort of like a hot tub for toddlers. So yeah, so it was it was probably 12 years ago. Do I have a link to it? No, the magazine doesn't even exist anymore. But anyways, so I didn't say it that way, meaning like, well, it's because there's no fundamentals behind it. But fundamentals, they don't necessarily give you a price. They only give you a direction. So my advice has always been, going to the very beginning of my trading days, is that you should have a healthy understanding of both technical and fundamental. That you can be only fundamental and make money. Look at George Soros. You can be technical only and make money. But I think you're going to be most efficient and most effective. Think about that, like if you're a business analyst. It's not that you're profitable. You want to know how can you become more profitable. And that's either increasing your efficiency per unit on creating the product, right? Or lowering price some other way. Lowering your input costs, buying in larger bulk to lower your input costs, right? Or you're buying better machinery, or you're training your employees, and your marginal cost is improved because you're constantly refining, right? You're constantly trying to maximize your returns. Well, if you're trying to maximize your returns, which is a different question, your question is, can you be successful just doing technical analysis? Yes, but you would maximize your potential or your profit, or the way you said it, success. You would maximize your success understanding both fundamental and technical. Okay, and this is a lot of what we do in the live trading group, because I can sit there and I can show you in a situation where you might be frustrated or even delusional, one or the two, and I'll show you how do you maintain mental and emotional control. And very often it's the combination of fundamentals and technicals. Okay? And that will maximize your returns, because at some point you'll need to know when to take on a little more aggression, but do it in a logical, intelligent fashion. But also, your aggression might be just not doing anything else, letting it run and not getting in the way. And I think if I could do one thing for everyone in this trading room right now, if I just could do one thing, like somehow wave a magic wand, and I was able to allow you to let your winners run a little bit more than you do now, you'd be significantly more successful. And the only way to have the confidence to allow that to happen is to know that there are fundamentals behind what you're doing. Okay? So there are times when I teach people that the technical target is this, X. But I'll say, because of fundamental reasons, we are going to go through X. I'm going to disregard the technicals for reason A, B, and C. And because of reason A, B, and C, we're going to blow the doors off those targets and we're going to go for higher targets. And then this other month, nope, we're not going to do that anymore. Oh, and in 3 months from now, we're no longer going to be bulls, we're going to be bears. Okay? And you're like, wow, well, that's not technical analysis. But wouldn't it be helpful if you had that plan? And so what are we looking at now? We're looking at business cycles. We're looking at political cycles. We're looking at seasonality. And they're not the same. Okay? There's even a real estate cycle. And of course, they're all related somehow. Okay? So each year is a little different from the last, but each year can be better than the next, right? So could you be successful only technical analysis? Yes. And in fact, when you're in my professional trading group, where they're learning how to be portfolio managers, they spend a lot of time on technical only. Because if you can't carry out a technical plan, why do you even need a fundamental plan? If you don't have the patience and discipline to put together a technical plan and then the capability of carrying it out perfectly, then having some other sort of emotional plan is irrelevant, right? So you have to have that. You have to have the capability of entering your trades beautifully every time. But then the next level of after that would be knowing why. Well, okay, so Raymond says first and second week in January, bear. Not necessarily true. So why don't we discuss that on Thursday? Remind me, okay? Because that you're taking a standard operating procedure, and because it's standardized, you're applying it to every situation. But of course, the next level of knowledge is knowing when the rules of engagement must be adjusted. So let's go over that on Thursday in the group. Are you going to be there? Yep, cool. Remind me, and we'll plan January. Cool, right on. So I had a brainstorm on Sunday. It's usually what happens after you have 2 energy drinks and 5 shots of espresso. But I created a list. And I don't have it in front of me. Oh, actually I do have it in front of me. Check this out. I guess you can't see that. I didn't prepare this to be seen, but I just want you to see it's true. Darwin, survival of the fittest. Gauss, survival of specialization. Ricardo, the laws of rent. Locke, private property. Smith, efficiency of specialization. Newton's universal law. Einstein's relativity. Freud, Marx. I was thinking of writing an investing book, not a trading book, but I thought like my Harvard books. Let's see if this will allow me to do it. Oh, it's not quite long. Okay, see these books? These books are like 100 years old. But there we go. Adam Smith, The Wealth of Nations. Okay? So these are well over 100 years old, these books. They're the first edition of the Harvard Yard, or whatever they call it, the Harvard Shelf. And the president of Harvard at the time, his name was Eliot. And Eliot said in an interview that you could summarize a Harvard man's education by 1 yard of books, like 3 feet, right? 3.5 feet. And he's like, really? A publisher from New York said, really? What books would you put on the Harvard shelf, right? Because again, he could say, you could summarize a Harvard man's education in 1 shelf of books, no longer than 1 yard. Okay, so imagine about 4 feet of books. And so a publisher from New York City said, really? Well, what books would they be? And they published them. So these books are, I don't know how old they are. Most of them, by the way, most of them I have wrapped like this. So I have every book, every first edition, right? So most of them are like that. So imagine in 100 years, this book will still be museum quality. This is acid-free paper. So anyways, so here was my thought. Wouldn't it be interesting to write a book where we take Darwin and Gauss and Ricardo and Locke and Smith and Newton and Einstein and Freud and Marx, maybe even like Machiavelli. Let me write that down actually. And what did we learn from these thoughtful people? And specifically, how can we apply it to investing? Sort of like, I consider myself a very, very amateur economic historian. So what if we took like the history of intellectual thought, at least from the Western world, and how can we apply it to investing? I thought that would be interesting to write. I don't know if anyone would care, but I thought it might be something fun to write because I like thinking about that. So I have a theory how the Black Plague was the best thing to ever happen to Europe, and I could explain it why, but it'd be interesting to break it down like chapter by chapter by chapter. What did we learn from Darwin? Would anybody care about a book like that? Einstein compound interest. Well, he didn't invent compound interest. Okay, so he's quoted as mentioning it, but the theory of relativity and E equals mc squared. So if c is the speed of light squared and m is the mass of a thought, how much energy do you need when you're trying to be a successful investor? And the amount of energy required is going to be significantly more than your idea to create it. Jim says, an interesting Dr. Thirst. I don't want to do that kind of research, but I wouldn't mind writing the book. I think just for me to think about it would be an interesting intellectual challenge. But here's the thing, like, no one really said it was a good idea. That's the thing, I don't think anyone would want to read it. That's the thing. I might want to do it anyways. Yeah, brief history of time. Yeah. Cool. Let's do, no, we already did exotics. Just leave it there. So, like, I think it'd be interesting to write, I'll give you an example. My daughter is learning, chemistry and physics and stuff at school. And just last night, she was listing out the things that she was learning. And like most schools, right, they learned the concepts, but not the history. And the way she listed it out, I can't remember what it was, but like she basically listed Newton's laws, and then because she was talking about strong force and weak force between molecules and stuff. I'm like, well, that's from Einstein. And so you have to understand that Newton and Newtonian physics was a massive social change in the Western world, where suddenly we can have it all figured out. We're not at the whim of the gods controlling the universe and the stars, but it was actually all part of this thing that Newton called gravity, because and they never put this together for me, but if you think about it, he said an object at rest tends to stay at rest. Well, where did he rip that off from? He didn't create that. Where did that come from, by the way? An object at rest tends to stay at rest. An object in motion tends to stay in motion. Where did he get that from? That's not Newton. Oh, it's part of Newton's laws. Yeah, he ripped that off. Where did he get that from? Anybody know? Well, what are you going to do, rookie, when you are rich? Once you get past the money part, you're going to be more interested in having an interesting life. Galileo, by the way. So he ripped off Galileo. The Bible. No, he ripped off Galileo. Okay? An object at rest tends to stay at rest. An object in motion tends to stay at motion, right? Unless a forces act upon it. Okay? So now make the connection here. Newton's known for the apple dropping. Okay? So when the apple dropped, what did he notice? It was speeding up when it hit the ground. Wait. Gravity's constant. Or whatever. There's a constant force, but it was accelerating as it fell. So there's another force, right? And that's where gravity comes in. But so there's those laws, but it worked very, very well, but it wasn't perfect. And it was Einstein that came in and was able to say, well, it depends. It's relative where you are in space and time and how and where it's acted upon and all that kind of stuff. And so, it'd be great if they taught that in school, where they put it in order, and they're like, okay, here's Galileo. He found out that the planets are moving around the sun, and the sun doesn't rotate around the Earth. And when he came up with this idea, they threatened to execute him. But he did it anyways. So they stuck him in a bell tower, and he died alone, the top of a bell tower, in wherever Italy. Anyways, so you're like, well, he put everything on his line. He put everything on the line to prove that that's true. That you could drop an apple and a bowling ball out a window, and they're right, all these different things, and they're like, ooh, you're proving that God's not in control, so we're going to have to kill you. But he did it anyways, and they locked him up for the rest of his life. Cool. So Newton comes along, and he says, well, that's interesting. What invisible force is making it fall faster and faster and faster? The invisible hand, not Machiavelli's invisible hand, but the invisible hand of gravity. So he got that right, but of course all he did was refine Galileo. And then of course we get Einstein comes in and he refines Newton. And Stephen Hawking did nothing. He was famous because he was in a wheelchair. So, all right, nobody cares, so I'm not sure what to do next. What should we do next? 9:30, market's kind of opening. I guess, I think we should double check the calendar. Let's do that. So I bought this new keyboard because it's fast, and it's fast. It's so funny. It's so fast. As soon as I put my hands near it, I mistype something. There's always a J, for example, because that's where you go to center your fingers, and all of a sudden, boom, there's a J. Oh no, it's so fast. Oh, I guess I don't have to type it in. Wayne, will this week's presidential debate have a major impact? Okay. Why would there be a major impact? Let's discuss this before I go through the calendar. There's a question here. Wayne, will this week's presidential debate have a major impact? So we have to answer it. Why would there be a major impact? We know there's going to be waves. Was there going to be a tsunami? So the question is, why? No, don't say that, rookie trader. Presidential debate will always have a major impact. No, no, no. No, 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 no. I want you to think about it. It's a cop-out to say that. I'm not slapping you down. I'm just saying that's way too easy. You have to answer why. Why would it change everything? Why would there be a major impact? What, a new policy announced? What makes a major impact is the question. A major impact is a new fiscal policy announced or clarity on who will be the President of the United States. Okay? And the oddest thing in politics could be the unknown unknown. There was a guy, I think from Wisconsin, who was qualified to run for president. He was doing very well in the polls. And he was at a rally, and everyone was cheering his name for president, and he got all excited, and he went, woohoo! But his voice cracked, and it came out like awkward. He's out. That's it. Okay? That's it. He's out. That's a very unpresidential woohoo. Ruined his career. It was just... So there can be something, like if Trump comes out, if you said his name, I'd remember it. I can't remember his name. But he was qualified. Like, he wasn't a bad candidate. He was one of the better candidates. But it was out. So anything could happen. Okay? So if something happens where Sleepy Joe falls asleep and they're like, oh my God, he's too old, out. Or Trump just goes ape crazy and embarrasses the Republican base, he's out. Okay? But I don't think that's likely to happen, but it could happen. Okay? Not Ross Perot, not Bernie Sanders. None of those guys are from the Midwest, guys. From Wisconsin or something like that, I think. This must have been, post-Clinton. Bob Dole. No, and he wasn't the major candidate yet. He was on his way, and I couldn't tell you how long ago it was. But, anyways. So, let's go back to this. If something happens where someone loses, okay? Hey, Maida, are you going to be there Thursday in the group? Hope so. So if something happens where clearly someone has lost, I don't think anyone can win because they're already winning their base. So someone would have to lose their base. So that's not going to happen. But if the unknown unknown happens, then okay. If a candidate offers a major new fiscal plan of free money for everybody as a way to kind of win the base or whatever, maybe so, because then the market will say, all right, if Trump wins, he'll release $2 trillion. If Sleepy Joe, I always forget his name, sorry. If Biden wins, he'll release 2.5 trillion. So if we get to a scenario like that where whoever, doesn't matter who wins now, we're going to get a couple of $1 trillion of free money, then yes. But they both have to announce it, and they kind of have to be fighting over it, and they'll be asked about it being stalled out, and he'll say, either candidate says, well, if you elect me, I'm going to fast track this because I'm doing this to save the American people and to save American jobs and blah, 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 blah. But if you vote for me, I will fast track this. And if they both say it, okay. But don't say things like, oh, well, of course, they're all important. No, they're not. These presidential debates, if you actually think about it, if you know anything about America, right? 99% of people that actually vote already know who they voted for. In fact, I think most people I know have already voted. So, like, what happens now is irrelevant. It's already done. So what is this for? Who still hasn't voted? Okay? So the undecided? Well, how many people are not undecided? Howard Dean! Ron got it. Ron nailed it. Good job. Were you Googling it? What did you Google? He Googled presidential candidate woo-hoo. Okay. Okay. Very interesting. It was Howard Dean. You nailed it. I hope he's actually from the Midwest. Maybe I threw you guys off. Some people are like, well, Ohio's Northeast. Well, okay, that's true. I would have not called Ohio Midwest, but some people do. I don't. $50 hadn't voted. All right. Okay. So anyways, if we get both candidates to guarantee us a fiscal package, that will move the market. If a candidate clearly has lost, I don't mean Biden looks bad in front of the Republican base. That's not what I mean. Biden looks bad in front of his liberal base. Or Trump embarrasses the Republicans, where he suddenly turns atheist and pro-choice and suddenly hates guns. Okay? Then forget it. You're out. Okay? So if those things happen, you got to, there's a clear loser, or they both guarantee us a fiscal stimulus, then yes, we will get the market to move. But this is not the opportunity for you to bet $1 billion. Okay, keep your powder dry for election night. Okay. And by the way, anyone in my live groups will trade that with me if they want. I'm gonna do a special Zoom where we can watch it together. The only rule is you have to stay sober. Can't pull a Hillary is what I said last week. Okay. All right, so let's go through this. Okay. You got the median minutes. You got the Chinese. Let's go. Hang on. Waiting for a download here. I'll just show you where I am. Oh, good. It finally downloaded. Look at this. The Bank of China's research on global economic and financial outlook. See all these pretty colors? Tables and charts and stuff. Danger zone! To the danger zone. Elasticity of wealth effects on financial assets. Oh my God, that sounds so much like school. Cool. So anyways, they got lots of interesting things published in English, by the way. Isn't that nice? Happy birthday to the motherland! I just love how that comes across. Look at this bank card. I can get the Great Wall Rat Year Zodiac card. Oh, snap. Forex Market Analysis Daily Review. Oh. Anyways, wonderful. So that's one I just showed you. The similarities, differences, impact, and enlightenment of the Fed's monetary policy during the financial crisis and the new crown epidemic. Wow, that looks very interesting. I'm going to have to read that. I'm going to have to read that. Please click here. That's going to make it difficult. That I understand, though. This is interesting because this could be, oh, I like how they call it wind. Very interesting. There's a point in a real estate cycle that that a neighborhood, for example, chooses whether prices go up or prices go down. It's kind of interesting. Try to figure out what this is. So anyways, lots of interesting stuff. We are so blessed to have this info available at our fingertips whenever we want. Rookie Trader says China is catching up. In many cases, it is surpassed. All right, so anyways, very, very cool stuff. Do a little bit of research on the interest rate, but of course, why? What the interest rate is irrelevant, really. It's the why, and you need to think 1 or 2 meetings ahead. Are they cutting? Are they raising? Right? Their GDP is only 4.9% right now. But, you know, every sort of OECD country is negative right now, and they're only positive 4.9% or 4.7 or something. So it's very interesting. Great On says it's a beautiful language. I think it might be. I mean, obviously I don't speak Mandarin, but I think it was something like this. Someone described it to me once. They're like, this is the symbol for sky, and this is the symbol for man. Something like this, I guess. Like your infinite possibility, like the sky. I don't know if that's true. I might be wildly off, but I'm like, if that's interesting, if that's somewhat true, I'm like, well, it's very poetic. So anyways, zipping out to, so a lot of Aussie news, probably not that big of a deal. I mean, home sales, I suppose. But we already got other things overshadowing that. So moving on to Wednesday, a lot of CAD news, some pound news. But I get, like, with pound, you'd have to assume Brexit overshadows, short-term inflation. Okay. Canada will be interesting because it'll be somewhat of a reflection of the United States. If Canada's largest trading partner by far is the United States, if Canada's doing good, then the United States must be doing good as well. One way of looking at it. The Beige Book. What do you think about that? Are you actually going to read it? It's tomorrow. Here's the last one. Do you know what this is? I've explained it multiple times, but if you haven't gone through the fundamental course, you wouldn't know. But one of the roles of the president of each central bank, so in the United States of America, there isn't one central bank, but many central banks. Okay? The one in Washington, D.C. is the Board of Governors that oversees the system of central banks. But the San Francisco Fed, the Dallas Fed, and the Atlanta Fed, for example, are completely independent central banks. Okay? And one of the roles of each president of all of these central banks is so Janet Yellen used to be the president of the San Francisco Fed before she became the chairperson of the Federal Open Market Committee and also chair of the Board of Governors. So her job at that point was to interview all these people, in this case, businesses along California and up to Seattle and, what do we have here? Colorado, right? And Arizona and New Mexico and Idaho and Montana and wait, is that Colorado? No, that's Colorado. So where do we go? Nevada. Wyoming, sorry, Wyoming. Right, Oregon, Washington State. See, not bad for a Canadian. Anyways, so it's the job of the president of the San Francisco Fed to interview and actually have conversations with business leaders from all these states. Okay? And the reason they do it is they're asking for forward guidance. Not just how has business been and how is business now, because you can get that through the aggregate data. You can just gather the data. But instead they say, what is it going to be like in the future? Okay, Microsoft, business has been all right, stock prices are up. How do you feel about the future? How's your cloud business doing? I don't know if they get that detailed, but let's say they ask a basic question like, do you plan on hiring new employees in the next 12 months, for example? And if business is good, Microsoft would say yes. If business was bad, they'd say Microsoft would say no, so on and so forth. And they ask all these businesses all around California. And they're trying, right? So there's two things. They're looking at past data, okay? Past and current data, like what is, retail sales, how many sales and how much inventory turnover and all that kind of stuff, right? Your typical business ratios and stuff. And then the future they get through surveys. And from that, the president gets a good idea of what economic activity is happening, has happened, and is going to happen in their region. And they can make determinations on what kind of policy should be enacted in this region, because if things are slowing down a little bit in San Francisco, right, in Detroit and Cleveland, it could just be depression. And so there would be something else going on here because they're not doing high tech over here. This is the Rust Belt. So there's going to be a different economy here. And that's why it's done. Okay? Okay? And look at this. Lots of farmers in this area. There's lots of farmers being represented in this area here. Okay? So they did that on purpose to balance all of this. Okay? So, anyways, they gather this information and then they supply it to the Board of Governors in Washington, D.C. And it's the backward-looking, current, and future-looking data that they've gathered as president of their central bank. And they send it to the Board of Governors as their report. And they put a cover on it that is beige colored, and they called it the Beige Report, the Beige Book. But Minneapolis, okay, who's in Dallas? Kashkari, right? Anyways, these guys, by the way, the president of the Atlanta Fed is an African American man who's also openly gay and just made it to the Harvard Board of Overseers. Like, wow, guy's a perfect candidate. So, okay, all this information is provided to the Board of Governors from all these central banks stationed around the United States. And they compile it into one report so that it could be read and discussed, and of course ultimately goes into the staff projections and eventually a policy statement. Okay? Because they can debate what needs to happen, and the Cleveland Fed, the San Francisco Fed, and the Dallas Fed, and the Atlanta Fed inevitably are going to have slightly different points of view, maybe dramatically different points of view. Okay? But it's all based on data. Check this out. You get the data for free. Now, there's also a blue book and a green book that's produced for the Federal Open Market Committee by the Board of Governors. And those are like things like staff projections, and that is not public information. St. Louis, economic activity has increased modestly. Cleveland, the region's economy grew modestly. Dallas, San Francisco, right? This is them reporting in. Okay? See? The West was flat. So, very cool information. Thank you. This is the old one now. Tomorrow we get a new one. Will you download it and read it? There might be 2 pages of reading, guys. Maybe 2 pages. Maybe 2 pages. Oh, you did the Shenzhen to Beijing? That's a long haul. Shenzhen's a nice town. All right, so Thursday, not a lot. All right, Friday, more pig news, but again, overshadowed by Brexit, some German news, more pig news, nah. Interest rate decision for the rube. 1,600 miles. Well, the thing is, did you go through Shanghai or Wuhan? Sorry, Wuhan. You don't say the W. Probably Wuhan. I would imagine. Just it's more of a straight shot and less of the congestion that Shanghai. Because Shanghai is actually not just north but east, and then you got to go back west and then up. So you probably did a straight shot. But I thought about doing Shenzhen or Guangzhou to Shanghai. I thought it'd be fun to pick up a plane either in Shanghai or Wuhan. But it's a long way, and you'd have to change a couple of times. I'm like, forget it. It just didn't work out for whatever reason. But Beijing is, that's a long ways from Shanghai, and a long ways, yeah, from the south, man. Holy smokes. Okay, so, I would look at this calendar as sort of the free and clear plan. Like, nothing's going to get in our way. Oh, you drove it too. That's interesting. I was thinking train. All right, guys, so I've taken too much of your time today. I apologize for that. I also apologize for missing yesterday. I don't know if you can tell, but I'm quite sick. No COVID, right? No COVID, no COVID. I have to tell people, but I have no temperature, 98.4. So I'm actually lower than most people. So it can't be COVID, so it's just Dayquil, NyQuil, that kind of stuff. But so it looks like nobody's interested in the sort of the intellectual anthropology history of investing. So I guess I won't write that book. But I am very much interested in doing the book club. So once again, email me if you know me, wayne@fxbootcamp.com. Email me if you would very, very seriously like to be involved in a very, very serious, not book club, but like very widespread and diverse financial education, and that you would contribute very seriously toward it. It may require reading a couple hundred pages over the course of 2 weeks and taking very, very detailed notes as you go. Made us like it's too much. Yeah, I mean that's what it is. But like I don't know. There's so many stories I found in history as I learned. So like Machiavelli, that was great. So they opened up. So one of the classes I took at Harvard Business School was financial accounting, and the professor shows a picture and he's like, "This is the first double ledger ever recorded in history." It's at the Harvard Business School Library, the Baker Library, and it's Machiavelli, right? The Machiavelli family. Well, not the Machiavelli family, of the Machiavellian times. It was the Medici, right? So it was a Medici double ledger. This is it. We have it. We have it. This is it. This is the first double ledger accounting book in history that we have, the oldest one in the world. And I'm like, very cool, right? So like, how does Machiavelli and, for example, the international political economics of the time, how is that similar and maybe dissimilar from today's period? And what could we learn from things like ruthless competition? Is it good for trading? Is it good for business? And then, so what does it mean if we give up free trade in the world and we move to somewhat not free trade world? What has history taught us about having, so like in economics, when you learn, you start with a closed border, and then you learn about a somewhat open, somewhat closed economy, and then a fully open economy. You get different economics for those. Well, what are those differences, and what have we learned from Machiavelli's time towards investing? So, for example, if Trump goes into a trade war and makes us less open, what economic impact would that typically have? And by the way, we've known that going all the way back to Machiavelli's time, right? It's nothing new. We already know this stuff, and someone has already written really nice books about it, right? How do you even spell it? Sorry, Velli. Niccolo Machiavelli. There he is. 1500. Okay? So, for example, there's already a book on either, this is more of a political book, but you could do this more of international political economy, because the way I looked at it is it was nation states in the Italian region, except it wasn't Italy yet. But there was, on the Italian peninsula, I guess, there was all these little nation states and they were all closed. So what does that do for economics? What does that do for politics? And then when the politics change, why? And then second of all, and they started to trade with each other, how did the economy change, and what can we learn from that as far as free trade, not free trade? But like, this book was written in 1512 in beautiful fashion. I've read, like the actual pages, and it's beautifully said and written, but the average Joe on the street doesn't know who Machiavelli is. But what could we learn from the closed border, ruthless competition of Machiavelli's time and how it impacts the economy? Could be interesting, right? Like, it'd be interesting to discuss that. So that's my thought, but maybe it's more interesting to write it than to read it. Most people maybe don't care. And they're like, Machiavelli. Okay. But anyway, so that's that book. But for the book club, if you want to read lots of books, 1 or 2 books a month as a group, and put together an amazing educational journey for a whole lot of people, that's what I want to do. Darwin's on compensation, yeah, that was a second book or something. But what I wanted, like the way I wrote it down in order here is like, so Darwin, obviously he's known for the survival of the fittest idea. And I was thinking about how that is true when it comes to investing, in particular, if you're investing into somebody else, like you're investing into a hedge fund, you're going to look at all their performance factors, and it's going to be the fittest, right? But it doesn't predict how someone will behave in the future, and it doesn't predict how they'll perform in a change of market conditions. What it showed you is how fit were they during a certain market condition, right? And then Gauss was different. I mean, we're talking 100 years later, he's looking at specimens in a petri dish, and he found it out that as he changed the variables of the environment, some competed and killed each other, and others competed in a different way, and they co-survived together. They found a balance, almost a way to work together. And I thought, well, that's interesting, but they did it through specialization. And there's another example I was reading about warblers. My mother likes birds. She likes warblers. And apparently when you look at a spruce tree or some sort of pine tree where these warblers like to live, if you put like 50 of these little birds in a tree, they'll like kill each other. So what they found is they live in different parts of the tree, and they found a way that each warbler as an individual now somehow is assigned or creates or finds a job to do that's unique from all the other warblers on this tree. and they work somewhat together. Like they find a way to be symbiotic. So this bird only eats these seeds, and this bird does that, and this bird gathers this, and somehow they work almost like an economy, where like nobody's necessarily in charge. There isn't a person, a warbler at the top of the tree making decisions for the warblers at the bottom of the tree, but they all find a way to like not bother each other. I'm like, wow, what an interesting, like if you think now of like a flea market or a swap meet or whatever you call it, where there's 1,000 people selling things and 100,000 people walking through and shopping through this marketplace, it's interesting that there isn't just mass chaos, but it actually works. Like everyone works together, and so I don't know. So like that's interesting, right? And then that could lead to like then Adam Smith. So like there's survival of the fittest, right? There's survival through the specialization that Gauss found, but then didn't Adam Smith also, like, wasn't there a form of specialization there as well? But a different type, not a specialization on how to work together as a unit, but on how to be more productive in a area, so that then you can share your gross output with somebody else. Well, then that takes me backwards. Then you're like, well, John Locke and the idea of that you have ownership, that you could produce corn on your property, and if you have excess corn, you could allow it to spoil. It doesn't matter. It's your private property. But there clicked a time where the neighbor to you grew apples, and they have too many apples, and the apples are spoiling, and you have too much corn. You eat all your corn, and there's leftover, and that spoils. So you and your neighbor get together and say, well, hey, why don't you use some of my corn and use some of my apples? Like, no one says you have to. It's not the government comes in and says, you must redistribute this excess corn, and you must distribute this excess apples, and we'll make... No. Somehow there was like this idea of there's ownership and that you're better off to trade. And that gets me back to Machiavelli again. And I see the circle, and I'm like, oh, they're all related. Right? So I think that's neat, right? So now you got Adam Smith, but how, right? And you got John Locke's idea of property, but then you can't talk about real estate without Ricardo, because an example here is how do we determine what a rent of a building is? And it's very interesting. Is it the location that determines the rent, or is it the renter that determines the rent? And there's a process to this, and this came through the corn laws of, like, I don't know, the English corn laws of 1580 or whatever it was. And it came down to, like, for example, if you're charging rent for land that produces corn, you might have three choices. You might have the best quality land that produces the best yield, a pretty good land that produces pretty good yield, and then not good land that doesn't have a good yield, but they all come down to different rent. Right? And so what is the rent, and how is the rent determined? And the behavioral finance behind that is amazing. It's amazing, the behavioral finance behind that. It's really, really amazing. You might think, well, okay, the one that produces the less is going to be the least amount of rent. Yes, but how is it determined? And then, like, well, what's the substitute? If you don't rent the land to become a farmer, what's your other choice? And that other choice it greatly impacts the rent on everything else. And it becomes really fascinating. Do you decide to work in a factory for $1 a day? Or do you rent the land that comes out with mediocre returns? And if so, what would that cost, and what's your trade-off? And all of a sudden it's all related. You're like, oh my God, this is so fascinating. Because now we're into behavioral finance. You're like, are you kidding me? Ricardo was writing about behavioral finance hundreds of years ago? And we can determine, based on this behavioral finance, how much money to charge Starbucks rent. If you own the building, you can determine how much Starbucks, or said differently, Starbucks can calculate how much rent they're willing to pay. And then that gets so fascinating, because how much is a ton of wheat? How much is an ounce of gold? Well, that's all the behavioral finance. You're like, oh, that's so fascinating, right? So like, how can you be a real estate investor and not know the basis for which price and rents are determined? Because if you're in commercial real estate, you can't determine the price without your net operating income. So if you don't know the rent, you don't know the net operating income. And if you don't know that, you don't know the price. So you're like, well, then you have to. And then all that changes by who is renting it. And you're like, oh my God, oh, this is so interesting. But again, most people are like, not interested. But you get to quote Machiavelli and Marx and Freud and Einstein, Newton, Smith and Locke and Gauss. And imagine if you're like meeting with potential clients to invest in your fund, and you can drop the knowledge in a logical way by telling stories. And you're like, well, that reminds me of Darwin. Investing into my firm, you might think, is Darwinian. But let me show you why it's not the case. Okay? So anyways. So I think about 5 people in the world will buy the book if I take a year to write it. So maybe I should put it on the sidelines. But if I wrote a book on how to get rich quick trading Bitcoin, I'd probably sell 1 million copies. All right, so I got to go. Thank you. Again, thank you for your patience with me. I'm under the weather. I'm sick. And I apologize for missing yesterday's, but it just wasn't good. I didn't sleep very well on Sunday night. Yes, I was trading, but then I just, the tickle in the throat thing, waking up 5 times a night. So I got the whole NyQuil thing down now, so I can at least get a decent night's sleep. But one of the things I like reading Adam Smith's Wealth of Nations, I have right there. And of course, that book I've held the book in right from Widener's library at Harvard. The original copy of the Wealth of Nations. I've actually held it and read it. It was pretty interesting. So you got to throw that in the book. So if anyone cares about that kind of level of history and somehow applying it to universal laws of investing and trading, let me know in the description below, and I'll read all the comments today. And it might be fun to spend 6 months researching that out and writing it. But if nobody cares, I don't know. I'll just rent the movie. Take care, everybody. Peace on earth. May the pips be with you. May our profits be above average. I'll see you tomorrow.